Yo, what's going on, everybody? It is Monday, October 13th, Columbus Day. Sitting outside here, it's a beautiful day. I think we got through the hurricane season. It's not over completely. I know it goes through November, but I just feel like down here in Florida now, less humidity. It's a little bit cooler. I don't think we have conditions right now for hurricane. You never know. But I'm happy because last year was crazy. All right, let's talk. Today, folks, today is a historic day. And I'll tell you why. And then I have a little story about that too. It's a historic day because this is the first time since 1980 that the price of silver surpassed its 1980 peak. And that back then was when the Hunt brothers were attempting to corner the silver market, when it reached like $50 and change. And today we surpassed that. 45 years it took to take out that level. Really, really incredible. And gold too is on a tear. And the gold rally, I'm going to talk about silver, but the gold rally is, it's starting to remind me of the oil rally back in 2008 when it shot up to like 150 a barrel. And it just kept going up and up and up. And I remember at that time I was at Fox. And the story back then were these long-only commodity funds. They would just buy and hold. And they were proliferating. These funds were very popular back then. And they would just get into commodity positions and they would buy and they hold and they add to it and add to it. And I remember I was at Fox one day, and I think it was maybe Denny Hastert, somebody who was actually Speaker of the House at that time. You got to look it up, or I got to look it up, in 2008. And I pulled him aside and I said, you know, you guys in Congress really ought to look into these long-only commodity funds because they're driving up the price of oil, and that's affecting consumers. And he pulls his assistant over. He had some aide with him, Hastert. I think it was Hastert. I don't know. He had some aide with him, and he said, have Snow look into this. And who he meant was John Snow, who at the time was Treasury Secretary. And nothing really happened from that. But what did happen was the CFTC, shortly after that, reclassified a big, long position that was held by supposedly at a time a commercial interest. And the CFTC reclassified that as a speculative position, causing that commercial interest, and I'll tell you who it was at the time. It was Vitol, the big Swiss commodity trading company, and they're still around. But that reclassification by the CFTC, that put in the top to oil at the time, and the rest is history. I mean, you know, now we're looking at oil at $60, and it's been kind of languishing down here for a long time. So now this gives me a segue into, I was just going to mention like gold, these moves that we're seeing now. I mean, they're starting to get a little bit conspicuous because it's really like, to me, it's really like a FOMO, fear of missing out rally that's in full steam. It's big time momentum. And, you know, you don't have this argument about, well, the dollar's collapsing and this and that, or inflation is blowing through the roof. No, the dollar is firming up, and it's going to continue to firm up. Inflation has come down massively since the COVID peak. So, I mean, you don't have these arguments anymore. And if you want to talk about the de-dollarization, which is something I spoke about a long time ago, I mean, if you look at foreign holdings of U.S. treasuries, which essentially that means foreign holdings of U.S. dollars, that's at an all-time record high, and it's just an uptrend, at like a straight uptrend. So you just, you know, the arguments are spurious. Anyway, let me get into my silver story because I think it's, you know, today's the day we got to talk about it. It's a historic day 45 years later, that silver made a new high from that attempted corner by the Hunt brothers in the 70s, leading up to the peak in 1980. So what was happening at the time, as the Hunts were accumulating silver, they were accumulating physical silver bullion, they were accumulating futures contracts. The bullion dealers on the COMEX, they were in hot water. They were in trouble because the bullion dealers were all short futures. They were all short silver futures because, that's what primarily what producers or dealers, that's their position because they own the underlying commodity, in this case silver. And so, they use the futures markets to lock in their profits. So they're usually short the futures market in their commodity. And the gold price kept going up and up and up because of this corner that the Hunt brothers were, implementing. And at a certain point, the COMEX called an emergency meeting of the board. And the chairman of the board of the COMEX was a guy named Henry Jarecki. He was a physician. He was a medical doctor. I believe, actually, he was a psychiatrist. He was a psychiatrist, which a very interesting guy. He got into precious metals, like early on in his career when he was still a practicing doctor, psychiatrist. And then he started, I don't know if he started a firm or took over a firm called Makata Metals. Makata Metals became a very influential, a very important, a very large bullion dealer, silver bullion primarily. And Makata Metals had a significant short position in silver futures at the time, all throughout that period when the Hunt brothers were attempting their corner. And in that emergency meeting that day, Henry Jarecki, who was the chairman of the board of the COMEX, decided, along with his other members, who most of them were other bullion dealers, very powerful. They're very powerful on the boards. I know, like, I was a member of the COMEX. I was a member of the NYMEX. You have commercial entities who are normally also board members of these exchanges. In the financial futures, you have board members coming from the big Wall Street banks. Anyway, what they did, they declared a liquidation-only market. In other words, they said, from now on, you can only liquidate. And this was their strategy. This was their attack on the long, speculative longs in the futures markets in silver. Liquidation only market. The board, essentially what they did, they changed the rules, right in the middle of the game. They're allowed to do that. I mean, it's their exchange. They could set the rules. And what happened was silver prices plunged. They collapsed. And it ended up bankrupting the Hunt brothers, who at the time, their fortune was estimated at $5 billion, which was one of the largest fortunes, if not the largest fortune in the United States. They ended up going bankrupt. Bunker Hunt, I mean, he died kind of young. I don't know, you got to look it up. But it was an incredible story. It was an incredible story. So here's where my personal connection comes in. One day, long after this, I don't know, maybe it was like, maybe like it was in 2010 or 2011, something like that. I was out in the city, in New York City. I was at some club, some bar or something like that. It was like down near Gramercy Park. I forget the name of the place. And I was with a friend of mine, and we saw these two hot girls, right, at the bar, right? So I said, let's go approach them, right? So I walk up, and I introduce myself. It's like two of these Russian chicks. And there was an old man there with them. And so I introduced myself to these, and my friend was there. And we start chatting him up. And then one of the girls says, hey, I'd like to introduce you to my friend, Henry. And I'm like, hi, Henry. I'm Mike Norman. And he says to me, hi, Mike, I'm Henry Jarecki. I said, you're Henry Jarecki? You're the guy who bankrupted the Hunts and you were running the Comex and you changed the rules. And he's like, so he told me that whole story, man. And so it ended up that I was at the bar, hanging out at the bar with Henry Jarecki. I think he passed away a couple of years ago. You know, he was already old at that time when I met him. But man, what a coincidence that I ran into this guy at that bar, and he was with these two young chicks, too. But it was so funny. So yeah, we reminisced about those stories. And then I asked him about these long, he was at the time, when I met him at that bar, he was running one of these long-only hedge funds. You know, it wasn't really a hedge funds. These long-only commodity funds that I just mentioned earlier. These things that just keep buy and accumulate. I don't think they're around anymore. If they are, I mean, they remind me, at least in their evolution and their demise, as the infamous. What is it called? Portfolio insurance back in the mid '80s, which was very popular, and that was what was blamed for the 1987 stock market crash. Like somebody at some Wall Street bank came up with this genius idea that, hey, you could insure your stock portfolio by, you know, when stocks decline by a certain amount, you start selling futures. Like this is some, you know, ingenious idea. I mean, you know, shorting a market as a protection or whatever, it's been around forever. But like whoever came up with this and whatever firm picked this up and ran with it, I think it was all the big firms, Solomon at the time, Goldman Sachs, Merrill Lynch, all of them. They sold this portfolio insurance like big time. Like every major institution had this portfolio insurance, which was like almost like I guess it was like a computerized system where if the market dropped a certain percentage, they automatically start selling futures. And what happened in the 1987 stock market crash was all of these things. It started out as a modest, I mean, I told my personal story about what happened to me during that crash. Maybe one time I'll say it again. I don't want to do it now, but like, at that, what started out as a modest drop on that Friday before Black Monday, it just mushroomed into a gigantic collapse because all of these firms started activating, or all of this portfolio insurance started to get activated, and it just was like selling upon selling upon selling, all right? Because the more they sold, the more it pushed the market down, the more they had to sell. So it was a freaking disaster. Now, I don't know what's going to happen with gold. To me, you know, I've been around a long time, folks. I mean, I've been in the market since 1979. So that's 46 years. And I've seen these kind of things before. They're not frequent. They're rare, thankfully. But when these things kind of get going, you know, they have a life of their own. They disassociate from any kind of underlying fundamental. You know, I was early in my call to buy gold and also with the fiscal flows. But now this is, even though the fiscal flows definitely are a supporting factor in this, this has kind of divorced itself from any kind, I think, from any kind of rational underlying. But we'll see. We'll see. And I stand by my prediction from last week, or I don't know, the week before. I said if we do, you know, because people saying, well, there's an inverse correlation between gold and the stock market. I said, believe me, if we go into an economic recession, which will cause the stock market to fall, I guarantee you will have a very, very significant fall in gold. Right now, I'm not predicting an economic recession. So I think this thing could go on for a while, nor do I think the COMEX or the London Metal Exchange. I don't think they're going to do what Henry Jarecki did. I don't think they're going to declare a liquidation-only market. So I don't see anything right now. You know, back then that was a wild move. That was a wild call for the COMEX to say, okay, we're changing the rules. You could only sell. You could only sell. And they bankrupted the Hunts. Fascinating story. Absolutely fascinating story. Anyway, that's it for today, folks. It's Columbus Day, so the bond market was closed. We had a nice bounce back. I said on Friday that the fiscal flows are very strong. I said the reaction on Friday was an overreaction. You know, we may give a little bit back from this rally today, but as long as these flows remain the way they are, stocks are going up. We're coming into earnings season. So I suspect that'll be good, although I think we might hear some guidance, you know, some cautious guidance, but that's fine. You know, no big deal. Anyway, that's it. Thank you for watching. Please like and subscribe, and don't forget to go to my website, pitbulleconomics.com, and sign up for a 30-day free trial to MMT Trader. See you tomorrow. Bye.